Are you ready to unlock the secrets of your USD currency curve? In this video, I'm going to share what's really moving this market right now and share some powerful tips to help you capitalize on these trends. If you want to stay ahead and turn insights into profit, keep watching. Today, we're going to review the double top setup, go over its key points, and analyze a real market example to better understanding it. Here, in the 4-hour time frame, we notice a pivot where the price makes a reversal, forming what we consider the first top. After that, the price pushes higher, breaking above the first top, but then reverses sharply, forming a strong bearish pin bar candle, creating the second pivot. At this point, we can identify a potential double top pattern. Once the bearish pin bar closes, we can consider entering a sell position. However, to achieve a better risk-to-reward ratio, we should also plan to enter during a price pullback. As mentioned in previous videos, pivots formed by pin bar often have a significant pullback zone around the 50% level of shadow of the pin bar. The stop loss for both positions should be placed above the second top. For the take profit, we measure the distance from the first top to the neckline and consider the same distance downward from the neckline. That gives us the TP level for these positions. These setups are purely my own analysis and are not guaranteed or 100% accurate. You should conduct extensive backtesting and forward testing on these setups before using them in your trading. These analyses are just clues to help guide your focus, and the responsibility for your trading results lies entirely with you. Thanks for watching.